Well, we've got the trade underway here on this Monday to kick off a brand new week. John Jenkinson with you. Right now over in the corn market, we've got the December front month corn contract, also the new crop, trading right at $3.70. That is up 3 pennies. We're going to look at a chart of all of this here in just a moment. March corn is up 2 3/4, 382 1/4. The July is up 2 1/2. November soybeans right now are up 4 1/4 at 861. January up 4 1/4, and the July is up 4 3/4 at 912 1/4. But for the wheat market, things are on the lower side. December Chicago wheat down 2 1/4. The new crop July down 1 1/2 at 551 1/4. December Kansas City wheat down 3 1/4, 513. The new crop July down 3 cents, 557 1/4. December Minneapolis wheat is up 1 now at 589 3/4, with the July steady and unchanged. December cotton, been watching this cotton contract, all of these contracts pretty closely. They've been higher through the overnight trade. December cotton up 120 at 79.12, and March up 123, now above 80 cents at 80.59 cents per pound. Joining us right now on the phone is Brian Hoops. He comes to us from Midwest Market Solutions in Springfield, Missouri this morning. First of all, Brian, good morning. Welcome. Got to know, what does harvest look like outside your back door?
Hey, good morning, John. Good to talk with you here. Hey, I actually drove from Sioux Falls, South Dakota on Saturday all the way back to Springfield, and there was a lot of combines rolling. The forecast has changed to a wetter forecast. That's allowed corn and soybean values to rally, and it's really not a good harvesting forecast. And originally, Thursday, Friday, the forecast was for 8 to 15 days of drier weather and looks like some open countryside. Now it's kind of changed just to the last 3 to 5 days before we get some more rains coming into the Midwest. And so that's really kind of given us some strength in the grain markets, but there's been a lot of activity over the weekend in areas that really probably could not support a lot of heavy machinery. They're just trying to get it out as quickly as possible.
Brian, here about a week and a half ago, we were talking about this level of support around the 370 mark here on the corn market. If we take a closer look at a December corn chart and we step back from it just a little bit and look at it from a 15, 20,000 foot level, now that we're back up here around this 370, what are your thoughts here?
Yeah, that should act as a decent support area. That's kind of a top end of a trading range that we had broken out of last week. We did pull back a little bit farther on Friday and Sunday night and completed about a 62% retracement and came into that middle of that trading range. So it was a good area to find some technical support. And if we can take out Friday's highs, that's 371, not that far away. That would be an outside day higher. And we've seen several of those on the charts, and each time they've been kind of a bullish impetus for futures to rally. So we do expect we're going to see another leg higher in this corn market, and should see some seasonal strength into the early part of November, especially with these harvest delays that we're witnessing.
Okay, while we're on November, let's look at a November soybean chart and also talk about harvest delays. This kind of sets up an interesting scenario as well.
Yeah, it does. The key support was about 847, and we didn't come down to that on Sunday night. We just did a retracement of this last rally. This is a market here that really is struggling, as a lot of soybeans have to be harvested yet, and they're in extremely wet conditions. It's going to take a lot of dry weather to get the remaining soybean crop harvested. You've got some resistance up around the 890 range. That's a long ways away from where we're currently at, but really going to get down to wet conditions and harvest conditions. If we can get back to that area, if we don't see the remaining soybean crop being harvested for quite some time, there's going to be susceptible to yield loss, more disease, and quality issues. We could go right back to that area, but that's your key resistance up in that 892 to 893 area.
All right, Brian, don't go anywhere. We've got more of the Market Day Report on the other side of this break. When we come back, we'll talk livestock next. Stay with us.
Yo, David.
Let's get right into the futures market over here. We'll start in the fats, and the October right now is up 63 at 112.88. December up 122 at 118 even, and February up $1.07 at 122.22. In the feeder cattle market, it's the November up $2 at 156.10, and that's still 78 cents away from the top of 156.88. January up 203 at 150.78, and the hogs are on the positive side. We've got December up 132 at 52.92. We're still working on a spread here between December and February. It's only up $1.23, and it's trading at 60.25. April up 75 at 66.47. Brian Hoops is here with us. Let's talk to him about this cattle on feed report. Brian, I've asked this question several times this morning, but what was your takeaway from this COF?
Highlighted some bullish numbers as far as the trade estimates go. The placements coming in far below what the trade had expected, and that's finally a positive trend for the cattle market. We're seeing a nice reaction in the futures and the feeder cattle as a result. The on-feed numbers came in a little bit friendly compared to the estimates, but it's still the highest on-feed numbers since 1996. So according to USDA, we have plenty of supply out there, but our slaughter numbers have been slowing a little bit. Our weekly show list estimates come in below the previous year, and that's supportive for cutout values. And it's also supportive for the cash markets, as that gives us plenty of packer margins to work with. So we do expect going forward in here, cash is going to slowly work its way higher. Last week, we did hear some 111.50 trade very late in the week, and that's going to be just 50 cents better than the prior week, but it's a step in the right direction.
I want to ask you about this, this number that's going to come out later with the cold storage report. This will be the first really cold storage since we had the electricity shut off in parts of North Carolina since the Hurricane Florence.
Yeah, it will. So it'll be interesting to see how that affects some of these cooler shortages and supplies. It's a number that's going to be closely watched, how we do compared to year-ago levels, how we do compared to last week, or last month, excuse me. And so it's something that we're really going to take a close watch with.
Yep. Brian Hoops here with us with Midwest Market Solutions, Springfield, Missouri, to talk to us a little bit. And Janet, we're going to continue to watch for those reports as well as have the new cutouts here at 11 o'clock Central Time.